The global economy is digitizing at a speed we've never seen before. Artificial intelligence isn't just creeping into our lives, it's taking over entire industries. From finance to education to entertainment, AI is replacing old systems and building new ones faster than most people can keep up with. And while that's creating massive opportunities, it's also sparking real fear among investors. Because here's the hard truth. Some companies simply won't survive. Think about it. Anybody with an internet connection and access to today's AI models can replicate entire services that used to take years of development. We're already seeing this play out. For example, Duolingo's stock has dropped sharply, and one of the big reasons is that people are creating free language tutors with ChatGPT, cutting directly into Duolingo's value proposition. That's what happens when a company doesn't have a moat against AI disruption. But here's the good news. Not all companies are vulnerable. Some actually have business models that are AI-proof, backed by regulation, trust, or scale that simply can't be replicated by a chatbot. And today, we're going to break down 3 stocks that are AI-safe, built to last, and still have plenty of upside for investors. But before we dive in, I want to take a moment to say thank you. We've just hit 1,000 subscribers on this channel, and that milestone is only possible because of you. If you find value in this video, don't forget to hit that like button, subscribe, and share. Your support means everything. Now, let's get into the first stock. 1. CrowdStrike CRWD. The first stock on our list is one of the biggest names in cybersecurity, CrowdStrike. If there's one area where AI is both a tool and a threat, it's cybersecurity. Hackers are already using AI to find vulnerabilities faster, create more advanced malware, and launch attacks at scale. That makes companies like CrowdStrike more critical than ever. CrowdStrike uses AI in its Falcon platform to detect and respond to threats in real time. But the company's true strength lies in its proprietary technology, regulatory compliance, and the human oversight that ensures data security. Think about it. Would you trust your company's confidential data to a free AI tool that could be hacked or manipulated? Probably not. You'd want a trusted name backed by proven systems and a track record of protecting Fortune 500 companies. That's where CrowdStrike shines. Its scale and customer base give it a moat that smaller players simply can't match. This isn't just about technology, it's about trust. Major corporations, government entities, and institutions rely on CrowdStrike. And once a cybersecurity partner earns that trust, switching costs are incredibly high. Financially, the company is strong. Analysts have set targets as high as $555 a share, implying solid double-digit upside. Institutional investors clearly agree. Over $7 billion in inflows have poured into the stock recently. Yes, CrowdStrike is trading near its highs, which might make some investors hesitant. But momentum, analyst confidence, and institutional buying all point toward continued strength. In fact, a breakout above its 52-week highs could attract even more buyers. For investors looking for a stock that thrives because of AI while being safe from AI disruption, CrowdStrike is a top pick. 2. Intuitive Surgical SRG. Let's move to the most fascinating companies in healthcare, Intuitive Surgical. This company is a pioneer in robotic-assisted surgery, with its Da Vinci system being used in hospitals around the world. At first glance, you might think, well, isn't this the kind of business AI would disrupt? But the reality is just the opposite. Here's why. No matter how advanced AI becomes, no patient, no regulator, and no doctor is going to allow human lives to be placed fully in the hands of artificial intelligence. Surgeries are life-or-death situations, and while AI can support doctors, making procedures more precise, safer, and more efficient, it will never outright replace them. That human oversight is mandatory, both legally and ethically. Intuitive Surgical benefits from this dynamic. It isn't trying to replace doctors, it's giving them superpowers. Its robotics allows surgeons to perform operations remotely, handle complex procedures with greater accuracy, and even reduce recovery times for patients. This is technology that complements human skill, not replaces it. And that's why it's so defensible against AI disruption. From an investment standpoint, the stock has pulled back, currently trading about 14% below its 52-week high. That underperformance is partly due to market sentiment as investors chase after flashier AI names like NVIDIA and Microsoft. But analysts remain bullish. Price targets sit around $595 a share, representing over 30% upside from current levels. Considering Intuitive's unique moat, built on trust, regulation, and proven success, it looks like a strong long-term buy at these levels. 3. Snowflake. The third company on our list takes us to the backbone of the digital economy, Snowflake. If data is the new oil, then Snowflake is one of the most powerful refineries in the world. Its cloud-based platform allows businesses to store, manage, and analyze massive amounts of data securely and efficiently. And as the global economy digitizes, the demand for this kind of service is only going to grow. Here's what makes Snowflake AI safe. While anyone can build a small AI model, not everyone can replicate enterprise-grade, scalable, and secure data infrastructure. Companies need a place to store sensitive data, and they need to know it won't be compromised. That trust, combined with Snowflake scale, makes it incredibly difficult to replace. The growth story here is global. Businesses across the US, Europe, Asia, and even Latin America are moving online, and with that shift comes more data than ever before. Every new customer account, every digital service, every remote workplace tool creates more information that needs to be stored and protected. Snowflake is positioned at the center of that megatrend. Analysts currently give Snowflake a moderate buy rating with price targets around $255 a share, about 15% upside. Some are even more bullish, with calls up to $275 or over 23% upside. For a company of Snowflake's size, those growth expectations are impressive and signal confidence in its long-term trajectory. When it comes to AI, investors have two choices: chase the hot names that everyone is talking about, or find the companies that will quietly withstand disruption and keep growing year after year. Intuitive Surgical, CrowdStrike, and Snowflake fall into the second category. They are protected by regulation, trust, and scale. They complement AI rather than compete against it, making them some of the most resilient plays in today's market. The AI revolution will create winners and losers. Companies like Duolingo, with low barriers to entry, are already showing cracks. But these three stocks have real moats that AI can't simply bulldoze. For investors in June 2025, that makes them not just smart buys, but potentially some of the most durable growth stories of the next decade.